To keep yourself updated, subscribe to Indigo Learn and click the bell icon and download our app OneFin to start learning on the go.
Hello students, hope all of you are doing well and gearing up for the upcoming non-defensive examination. And as a part of the preparation, it is very important for us also to have a look at the revision test papers. I hope most of you have already gone through it, but even then, if some of you have some kind of doubts, you can get it clarified as we discuss the RTP in this video. So this is about paper 1, accounting. Questions are more or less, straightforward, and if you know the concepts, it's easy to handle. There is no complexity at all, right? So we'll discuss. I'll not be solving them in detail because the detailed solution is anyways available. I'll be taking up the key points, what all things you need to keep in mind before you, appear in the examination. So to start with, without wasting much of our time, the first question is from preparation of P&L and balance sheet, and this is one question. If it comes in the examination for 10 marks, sometimes maybe for 15-16 marks also it's possible. This is a format based question, right? Now when I say it's a format based question, what do I mean by that? If you know the format, you will be able to handle this question in the examination. No complexity at all, right? So what you need to do, you just need to be aware of the format. You need to know which items to put where, and you are done with it, right? But please remember here, working notes, very important, schedules, very important. A lot of students don't prepare these working note and schedules and they lose out on marks, right? So to begin with, it says books of Oliva Limited on 31st of March of 22, right? So the details have been given. Inventory, now inventory 1401, these are your opening inventory of raw material as well as finished goods, that is given. Then purchase of raw material, that is given. Manufacturing expenses given. Now, while reading the question, don't bother about the amounts. Amount is just you need to copy from the question and write it in your answer, right? Then salary and wages, okay. General charges, bill, and the details of building, also value, plant and machinery, these values have been given. Furniture, motor vehicles, investments, current and non-current is given. Then trade receivables and cash in bank has been given, right? And on the other side, if you see, sales has been given. This will be your revenue from operations. Then interest, your other income. Then P&L. P&L is what? This is your opening balance, right? So to this opening balance, you will add the current year profit and you will do it. Then share capital has been given. Secured loans, short term, long term has been given. Long term will be a non-current, short term will be a current. Then fixed deposits, unsecured, short term, long term, 1500 and 3300. Now, some of you may have a doubt. Why is fixed deposit coming on the other side? Because this is a trial balance 2407-200, 2407-200. Then what is this fixed deposits unsecured? These are your again liability side. Don't think that these fixed deposits are your investments or deposits with bank. These are the deposits that the company has accepted. Okay. Remember your chapter on deposits in your corporate law. They would have learned about it. So there are some deposits and trade payables. These are credit balance. Don't think this to be an asset item. Please keep this in mind, right? Then TB is tallied. Once TB is tallied, there is it's easier for us to put them into the P&L and the balance sheet. Then closing inventory of raw material is given. Finished goods is given. Then outstanding expenses, manufacturing expenses, salary and wages. What will you do? Always remember adjustments. I have told this in the class also. Adjustment has two-side impact. So if let us say manufacturing expenses outstanding is so much, then for one impact will be in P&L, second impact will be in balance sheet. And the technique that I've been telling you, all of you, when you are solving these questions, is to have a single tick for the first adjustment, double, cross thing for the second adjustment, right? Then interest accrued on securities 300. So if you come back, you have 3900 here. To this you will add that 300 and that will be your other income. Okay. Then general charges prepaid. What will you do this? What will you do for this? You will reduce it from your expenses and this will be a prepaid asset. Provide depreciation on building at 2% per annum, machinery at 10% per annum, furniture at 10% and motor vehicles at 20% per annum. So based on these numbers, you will calculate the depreciation and you will provide for them in the balance sheet. Please remember to prepare it in working note or give it in sufficient detail in schedules. I would suggest all of you to prepare a working note for this so that you don't lose out on the marks. Then current maturity of long-term loan is 1000. Now there is a small amendment here. Current maturity of long-term loan, this is 21,000. So out of this 21,000, 1,000 is a current maturity, means that will be a current liability. Now earlier there was no requirement to show that under borrowings. Now you have to show them under short-term borrowings, right? Then taxation provision of 40% on net profit is considered. So you will directly consider 40% of net profit. Okay, don't apply your taxation lessons here. This is allowed, that is not allowed, and all of that. Straight away, whatever is the profit, 40% should be considered. Means profit before tax, 40% of that will be your provision for taxation, right? So all the adjustments, always remember two-sided impact. Impact number 1 in the P&L, impact number 2 in the balance sheet, right? Simple, straightforward. So we can directly, I'll show you the solution. It is easily understandable. There is nothing complicated here. Now coming to shareholders fund, share capital 315. Now here details of authorized capital and all of that is not given. Always remember, though institute has just not prepared a note for this, I would still suggest prepare note number 1 for share capital and just write there authorized, issued and paid up 3,15,000. So here they have not given any note here. They have just taken note for reserves and surplus. But I would strongly suggest that the first note before this should always be, it's a good habit. Okay, it's I know information is not given, but it's always a good habit to give and say. You can just say that authorized, issued and paid up capital is 3,15,000. That's the first thing, right? And while attempting these kind of questions in the examination, you can leave one full page for the balance sheet, one full page for the P&L, and after that you can have notes, and then you can have the working notes. Okay, that will help you. You will not miss out on figures. So first item, share capital, straightforward. Reserves and surplus will come only after you finish up the P&L, so you can do it later. Then non-current liabilities, long-term borrowings. Now 23,300. If you look at the question, here you have 21,000, right? How did we get 23,300 here? See, 21,000 here, this part 21,000, then 3,300 of long-term public deposit. So these are borrowings, right? 21 plus 3,300 minus 1,000. So 21 plus 3, 24, minus 1, 23. So that is how we have got 23,300 here. Then short-term borrowings is which what? 4,500 plus 1,500. So basically 4,500 plus 1,500, 6,000 plus the current maturity of 1,000, that makes it 7,000, right? So as I told you, pretty simple, pretty straightforward. Trade payables directly from the TB you can take. Then other current liabilities. Now other liabilities apart from that will fall part of other current liabilities. Now here you may say, sir, in the question there are no other current liabilities, but then in the adjustments we had, right, outstanding expenses. So your manufacturing expenses, salaries and wages, these are what? These are your other current liabilities that you need to provide for, right? So that is a part of this. Then short-term provision, this would be most likely the taxation, will come to it. Then non-current assets, property, plant and equipment. If you see the note number 6, building less depreciation, the closing balances, they have calculated here directly. So as I told you, you can do it in this fashion also. Show the gross value or the carrying amount minus depreciation, the closing value can come here, or you can prepare a separate working note. Okay, both of them are fine. If you give it in this detail, then you can combine it with the schedule as well, right? So you have building depreciation. I don't think there is anything to discuss on this. Then non-current investments. Now what are these non-current investments? If you see here, investments, they are given as current and non-current. So non-current 7,500 is a part of your non-current investment under non-current asset. Under current asset you have again current investments directly, inventory, raw material and finished goods directly, trade receivable, cash and cash equivalent, short-term loans and advances. Now what is this short-term loans and advances? If you see prepaid expenses 2490, that is part of your short-term loans and advances, right? Then other current assets 300. Now what is that other current assets? If you come back to the question, interest accrued on securities 300, right? So this is what is outstanding. So that is your other current assets. A lot of times we can club that prepaid expenses also as a part of other current assets. There is not much of a restriction on that. So that should be perfectly fine, right? Now coming to the P&L part, revenue from operations directly, you can take it from the TB. Other income 3,900 is given in the TB and 300 is your outstanding. Then most important, cost of materials consumed. Now what is this cost of materials consumed? Please remember that when you are preparing P&L in the format of schedule 3, you need to calculate raw material consumed. And I always been telling you the golden formula: opening stock plus purchases minus closing stock. So you have opening stock of raw material 30,000, right? Then 230,000 you will add 1260, you will get 1290, correct? 1290 minus closing stock of 25,800. So 1290 minus 25.8, you get 1264.2. That is what is the raw material consumed. Then purchases of inventory in trade. Right now, what is this purchases of inventory in trade? This represents the finished goods purchase. Now, if you look at the question, they have given you purchase of raw material, but they have not given you purchases of finished goods. Means finished goods are not purchased, and hence that number is blank. No need to disclose that number. Then changes in inventory of finished goods, WIP and inventory in trade. Please remember the raw material consumed part right here, cost of raw material consumed. This automatically takes care of your changes in raw material. So when we talk about changes in inventory, it is only about finished goods, WIP and inventory in trade. Here you only have finished goods. So you have to see what is the opening balance of finished goods, which is given as 46,500 and closing balance is 60,000, right? So if the closing balance is higher, we will denote it as negative number because it is like an income. And under expenses, when you show income, when I say income, it is an increase in profit. When you show that, we have to show it as a negative balance, right? So that is where we have this changes in inventory as negative item, reduction from expense. Then employee benefit expenses. Now employee benefit expenses, if you come back to the question, you see 40,200 here, that is salaries and wages, and outstanding salaries and wages 4,500, right? So 4,200 plus 4,500, 44,700, that is what will be your employee benefit expense. And depreciation and amortization, you can calculate from the fixed asset schedule, nothing like that, no, nothing specific there. Then other expenses, the remaining expenses, your manufacturing expenses and general charges. Remember, in manufacturing expenses, there is outstanding of how much? 67,500, and general charges, there is a prepaid of 2,490. Always remember this 2,490, this 67,500 will have a double impact. A lot of students miss out on this and they lose out easy marks, right? Simple question, nothing great to be discussed in this, nothing complicated. Only thing you have to remember is that under short-term borrowings, you will also show the current maturities of long-term borrowings. Current maturities of long-term borrowings will be shown under short-term borrowings, right? So you have to prepare a schedule here. Okay, long-term borrowings, short-term borrowings. All of these things we have discussed in the class. And provision for taxation is 40% of your profit. So profit before tax is 49,050, tax is 40%. Now one good habit that a lot of you should have is, when you calculate, right, tax expense, don't directly write the number, because you have to tell the examiner that you have calculated it as 40% of this number. Only then you will be awarded marks, because this is also like a working thing. Okay. Then reserve and surplus, balance is carried forward, and then that's it. Very simple question, I would say. Now moving on to the next question on managerial remuneration. The following information of X Limited, a non-investment company. Now, the moment you get non-investment company, one thing that should strike in your mind is, when you are calculating effective capital, you have to reduce the investment part, right? As on 31st of March of 22 was obtained, authorized capital is given. Is authorized capital important? Not at all important for calculation of managerial remuneration. So, don't waste time in reading that. Then issued and subscribed capital, you have preference shares 14 lakhs, 1 crore 17 lakhs of equity, then capital reserves, security premium, 15% debentures, investment, and P&L debit balance. Now the question, if you see, what is the question? You are required to compute effective capital as per the provisions of Schedule 5 to the Companies Act. A very straightforward question. Okay, you just need to take up the capital items and reduce those items which are to be deducted. Please remember, this is a non-investment company, so investments should also be reduced to derive the effective capital, right? So if you look at the solution, so you will take the paid up capital of preference shares, equity shares, capital reserves. Now, have they given anything about revaluation reserves? Okay, so they also have, I didn't read that out. So you can also, sometimes it's, you can also miss out. 1,75,000 is revaluation reserve, this will not be included. So 2 lakhs minus 1,75,000, only 25,000 will be included in that, right? So that is included. Securities premium, yes, included. 15% debentures included. Then reduce what? Investments. Why will you reduce investments? Because those investments, because this is a non-investment company, so the portion pertaining to investments will be reduced and P&L debit balance will be reduced. So A minus B, when you do that, is total of the capital items minus the investments and P&L debit balance. You get the effective capital. A very simple and a straightforward question. These are asked. Don't think these questions are not asked. Maybe generally for 5 marks. It's easy for you to score, right? Then moving on to the next question. The third question on cash flow statements. Again, cash flow also. If you know the logics, if you know what to add, what to reduce, it is a cakewalk. And I tell my students that these are the areas where you cannot lose marks. A 10-mark question on a cash flow statement, it should be out of out. There is no question of not being able to tally or missing out something. Unless at least 7 or 8, it is in your pocket. And I'll tell you, it is possible. Okay. Do I keep, at your age, and maybe I also be like, cash flow is difficult, sometimes some complex adjustments are there. It happens at that age, but now out of experience, I can tell you, a lot of students score full marks in, problems like cash flow statements. Because there is nothing where you can go wrong here, unless there is a very twisted adjustment, which, at a CA inter level, they don't generally test it. So it should be a cakewalk for you as well. So here, let's see. And yeah, very important. I keep on reminding, be careful of the years. Sometimes they will say year 1 here and year 2 here. Sometimes 21 here, 22 there. So please be careful of the notes that you have seen, right? And as you read the question of a cash flow statement, try to figure out, is there any movement, is there any adjustment that is needed, right? So let's have a look at the question. Equity liabilities, equity share capital from 1 lakh, it has gone up to 1 lakh 20. Means there is an increase. So there will be either a fresh issue or maybe issue of shares for consideration other than cash, right? Then reserves and surplus, obviously there will be changes. Trade payables. Now, what is the rule? If there is an increase in trade payable, means we have paid less, and hence it will be a positive number, right? I always keep telling, for liabilities, you have to do closing minus opening. So 8,000 minus 5,000 plus 3,000. 7,000 minus 4,000 plus 3,000, right? Obviously, in this short-term provision, if there are taxation and all, we have to remove that, but just on the face of it. Then PPE 58,000 to 78,000, we'll see what are the adjustment. Long-term investment 28 to 32, means there has been a increase in investment, so there can be an investment which has been made. Then inventory changes, working capital. For assets, what we will do? We'll take opening minus closing. Then you have trade receivable, cash and bank, right? Notes to accounts, they are given P&L, it's only P&L. So 8,000 to 9,000. So here, whatever is the change is only for P&L. Then provision for income tax 4,000, 7,000. So here, as I told you, right, you don't need to do this adjustment here because it's a tax item. We'll deal with it separately. Then building from 20 to 19, most likely depreciation. Furniture 22 to 34, they have added something. We have to say that. Car 16 to 25, again they have added something. The P&L shows income tax 8,000, provision for income tax 7,000, profit after tax 1,000. So here, if you see, this entire provision is provision pertaining to current period, which also means we have paid the previous period taxation, right? I have taught you in the class preparing both the ledgers and calculating and all of that, but in exam you don't need to waste that time. Okay, you can directly see, okay, this is what is paid, and hence that can be considered, right? Then depreciation on the building for the year is 1,000. We can see that. Depreciation on furniture and fixture is 2,000. Okay, so furniture and fixture 22,000 minus 2,000 of depreciation. It should have been 20,000. Now it is how much? 34,000, means 14,000 of addition, right? Then you can prepare a ledger or you can prepare a tabular format and do it. Then depreciation on the car 5,000. One car was disposed during the year 3,400, whose return on value was 2,000. Okay, so definitely we'll prepare a ledger so that we are not confused. Investments purchased 6,000. Okay, so investments, if you see 28 plus 6, it should have been 34, but it's only 32, means you have sold also. Sold investments for 10,000, these investments cost is 2,000. Okay, wow. So 2,000 is the cost of investment sold, that you will reduce from the investment side. What is the proceeds? Proceeds is total of 10,000. This 10,000 minus 2,000, this 8,000. What is this 8,000? This is a profit which you would have captured in the P&L. So while preparing cash flow from operations, you will reduce this part, right? So this treatment for this is 10,000 is your cash flow from investment. 10,000 minus 2,000, 8,000 is adjusted for CFO, and this 2,000 will be reduced from the balance to arrive at what is the net addition. Now, if you see here, 28, they said, okay, 28 plus 6, 34, minus 2, you get 32. So, no need to prepare ledger again, right? This is a straightforward thing which you can, derive it from the question itself, right? So, let's look at the solution. Net profit before taxation, 8,000. We can directly take it profit before taxation, 8,000, because taxation we handle separately and they have given us the number in the question itself. Then add back depreciation from the other information. You need to add back depreciation. Then, as I told you, profit on sale of investment, there is a profit of 8,000, right? Because investments were sold for 10,000, cost was 2,000, so there is this 8,000 profit you have to add back. And also, car sold for 3,400, returned on value 2,000. So here also there is a 1,400 gain that has to be adjusted. Cash flow from investment activity will be 3,400 plus or positive, right? So that is done. Then operating profit before working capital changes. Then increase in trade receivable, as I told you, always opening minus closing. Simple thing that you need to remember. No need to make it very complicated. Just go to the balance sheet and see opening minus closing. So this is minus 6. 6 minus 8 minus 2. For liabilities, closing minus opening, 8 minus 5 plus 3. So, minus 6 minus 2 plus 3. Okay. Then, cash from operations 1600. Income tax paid. I told you, right? Opening balance is paid fully. So, you get cash from operating activities. Then, cash flow from investing activities. Don't net off sale and purchase. Sale, show separately. Purchase, show separately. Now, how do we arrive at the number of purchases? 16,000. Let us see if they have done it this way. I would prefer it in a ledger format. So, let me quickly draw the ledger format for you. Okay. So, we have the car account. Right. Car account mein, what is the opening balance of car? Opening balance of car is given to be 16,000. Okay. So, opening balance of car is 16,000. Don't just write the numbers, write ledgers also to balance brought down and all of that. Okay. I am teaching you the solution, so I can write anything. So, opening balance is 16,000. Then, the question says that depreciation was 5,000. So, 5,000 of depreciation. Then, the question also says that car was disposed of for 3,400, whose WDV was 2,000. So, the cost of car sold is 2,000, right? Then, they have not given us what is purchased, but they have given us what is the closing balance. Closing balance of car is 25,000. So, balance carried down is 25,000. So, 25 plus 5, 30, 30 plus 2, 32. So, 16. Balancing figure to bank, 16. Right, this is what is the purchase. Sir, can we prepare in statement format? Yes, of course, you can prepare the statement format. I would prefer a ledger format because that is more intuitive and it's easier for us to understand. Same way, for furniture and fixtures, it is directly a depreciation, and you can calculate the acquisition on your own. You can prepare a ledger and try it out on your own, right? So that is about investments, and then there is purchase of investment 6,000. I have already computed and it's already given in the question. Then purchase of investment, I have already calculated that. If you want to see here, purchase of investment actually it's given in the question 6, and the closing balance we had calculated. And sale of investment, they have told us it is 10,000. Take the total number here, sale, and here purchases. Both of these have to be adjusted here also. Okay, profit on sale of investment, profit on sale of car. Then that's it. Cash flow from financing activities, there is an increase in equity. Please remember, if no information is given, you can assume that shares have been issued for cash. That's 20,000. Then that gives us net increase. Take the opening balance and the closing balance. It is done. Again, a straightforward question to be answered in the examination. Nothing complicated, I would say. Then moving on, another easy question, 8 marks. Easy 8 mark question. Sir, you tell everything is easy, we don't get marks in the exam. If you tackle these type of questions, you will definitely get marks. I have not seen students losing marks in these kind of questions. Let me tell you, 1 or 2 would be there who don't know the concept, but otherwise, my experience has been that students are able to score good marks in these kind of questions. Okay, so that is the part. So let's see. The promoters of Shiva Limited took over on behalf of the company a running business with effect from 1st of April. So 1st of April is the effective date. The company got incorporated on 1st of August. So from 1st of April, till 31st of July. This is the pre-period, pre-incorporation period. April, May, June, July. You can use your fingers and count. Okay, don't say 5 months and make mistakes. April to July, 4 months. Post-incorporation is okay. The annual accounts are made up to 31st March, fine, which reveal the sales for the whole year total 24 lakhs, out of which sales till 31st July were for 6 lakhs. Gross profit ratio was 20%. Such a simple thing. They have directly given you sales. 24 is the sales for the whole year. So, pre-incorporation is 6, post-incorporation is 18. Time ratio is 1:2. This ratio is 1:3. Right. So, nothing complicated here again. Gross profit ratio is 20%. So, directly take the sales, calculate the gross profit. From that, salaries, time ratio, rent, time ratio, sundry office expenses, time ratio, travelers commission, if it is for sales, you will take sales ratio, discount allowed, sales ratio, bad debt, sales, director's fees, post incorporation, tax audit fee, I was about to write time ratio, but it has to be sales because tax audit is based on turnover. Okay, depreciation, time ratio, debenture interest, post incorporation only. Prepare a statement showing calculation of profits for the pre-incorporation and post-incorporation. So, very simple, nothing complicated. Right, so that rent, rates and taxes time, sundry office expenses time. If you cannot allocate something based on sales, you allocate it based on time. Travelers commission sales, assuming this is for salesman travel, okay, and generally travelers commission will be for that only. Then discount allowed is obviously sales, bad debt is sales, director's fee is post, tax audit as I told you is based on sales because tax audit is determined based on the turnover, that is why it is based on sales, okay. Then depreciation time, debenture interest post. Then you can allocate the, we calculated this directly, so again very simple. Sir, why are you doing simple questions? Just for a quick refresher. Maybe somebody would get a tax audit related adjustment and then you make a mistake there and you lose some marks there. I don't want to do that. Okay. Then coming to the next question, accounting for bonus issue. Okay, past journal entries. Rise Limited with subscribed capital of 7,50,000 consisting of 75,000 equity shares, called up capital 7.5, bonus of 187,500 declared out of general reserve to be applied in making the existing shares fully paid up. So what is happening here? You have partly paid up shares. 7.5, that is the amount called up. Okay, now you have to make it fully paid up shares. So basically, bonus has been declared to convert the partly paid up shares into fully paid up shares. How many shares are there? There are 75,000 shares. There are 75,000 shares. How much amount is needed? 2.5. 2.5 into 75,000. 75,000 into 2 is 150 plus 37,500. 1,87,500 is the amount we get to make it fully paid up. That is what is the bonus which has been declared. Now, bonus is declared out of what? Out of the general reserve. So, what you will do? You will debit the general reserve and credit the share capital, or debit the general reserve, credit the final call, and debit final call and credit the share capital. Right. So, general reserve you debit, bonus to shareholders, share final call to equity share capital for the final call entry, and bonus to shareholders to share final call account 187,500. Right. So, I would just generally do combined entry, but better to split it and then show it so that you don't lose out on it. So, first is for this bonus due, right? Debit the general reserve. Second, the final call amount due. Third, making the allotment to the bonus to shareholders, right? Then, next question. A Limited having fully paid up capital of 75 lakhs consisting of equity shares of 10 each has general reserve of 1350. It was resolved to capitalize 7,50,000 out of general reserve by issuing 75,000 fully paid up bonus shares of rupees 10 each shareholder to get 1 share for every 10 shares. Nothing. So very simple. Bonus to shareholders, general reserve to bonus to shareholders to equity share capital account or share capital. As soon as that is a very straightforward question. Then issue of rights. Generally these get tested. Okay. Nita Limited has decided to increase its existing share capital by making rights issue to its existing shareholders. The company is offering 1 new share for every 2 shares held. So, ratio is what? 1:2. If you hold 2 shares, you will get 1 share. The market value of the share is 360 and the company is offering 1 share of rupees 180 each. Calculate the value of a right. What should be the ex-right value of the share? So, what have they done? I'll write it here. Cum rights price is 360. Issue price is 180. Right. So, you need to have 2 shares of 360 each to calculate the theoretical ex-right share price You need to have 2 shares of 360 each to get 1 share at 180. And after this exercise, you will have 3 shares in total. Correct? So, how much will that be? 2 into 360 is 720. 720 plus 180, 900. 900 divided by 3, you get 300. So, 300 is the theoretical X right price. Then, what is the value of right? Obviously, your come rights price 360 minus 360 is the come rights price. That's a very simple question for us to understand. Right? The value of the right is come right value minus X right value, which is 60 per share. Now, moving on to the next part. Dheeraj Limited had 5,000 10% redeemable preference shares of rupees 100 each, fully paid up. The company had to redeem these shares at a premium of 10%. So, 10% redeemable shares, you have to give premium of 10%. It was decided by the company to issue the following: 40,000 equity shares of 10 at par, 2,000 debentures of 100 each. The issue was fully subscribed and all accounts were received. The payment was duly made. The company had sufficient profits. Show journal entries in the books of the company. Now, here, first thing, you are redeeming 5,000 shares. At what value? 10% premium. So, amount payable to the shareholders will be 5,000 into 10 into 110%. That is the first thing. Amount payable to shareholder. Then, 5,000 into what is the face value? 5,000 into 100. What is the face value redeemed? Face value redeemed is 5,000 multiplied by 100. That is 5,000 and 2 zeros, 5 lakh. Okay. Now, out of this, how much is funded by fresh issue? Equity, fresh issue. Issue of equity is 40,000 of 10. So, 4 lakhs. Means what? This minus this, 1 lakh should be credited to your CRR account, right? Because 4 lakhs is funded by fresh issue of equity. Balance 1 lakh is not funded. That you have to debit the general reserve or the P&L balance and credit the CRR. That is the first thing. Second, premium on redemption. What we will do? We will debit it to the P&L, right? Don't get confused that okay, 2,000 of debentures of 100 each have been issued. We will use this to redeem the preference shares. See, amount is used, but for CRR purpose, you will use only the issues, fresh issue of equity or preferences. You will not use issue proceeds of debentures, right? So that is the calculation part of it. Again, very simple. So you have issued 40,000 shares of 10 each. You will get bank to equity share capital. Again, here some students have a doubt, sir, should we write application, directly allotment and all of that? We can say bank to share application to equity capital. That is also okay. Directly also writing is okay, especially when it is redemption. Then bank to 12% debentures money that has been received. Then 10% redeemable preference share capital 5 lakhs, premium of 50,000 to preference shareholders to bank, again the redemption part. Then premium on redemption to be debited to P&L. Then P&L to CRR 1 lakh because so much of amount has not been funded with a fresh issue of equity. As simple as that. Now don't get into interest should be provided and all of that. That is not asked in the question. That is not a part of the question. It is more to do with the redemption and the transactions that has happened. Okay. Then moving on to the next question. Redemption of debentures. XYZ Limited has issued 1,012% convertible debentures of 100 redeemable after a period of 5 years. So, how many? 1,012% of 100 each redeemable after 5 years, 1 lakh. According to the terms and conditions of the issue, these debentures are redeemable at a premium of 5%. The debentures holder had the option at the time of redemption to convert 20% of their holdings into equity shares of rupees 10 each at a price of rupees 20 per share and balance in cash. Debenture holders amounting to 20,000 opted to get their debentures converted into equity shares as per the terms of the issue. So, 20,000 means what? 20,000 of 100 is, okay, not with the premium portion. Debentures holders amounting to 20,000 opted to get their debentures converted. You are required to calculate the number of shares issued and cash paid for the redemption of 20,000 debenture holders. Okay. So, rupees 20,000 debenture holders, only to that extent, how many shares have been issued and how much of cash has been paid, that is what is required to be calculated. A very simple thing here again. So, basically, 20,000 is the total value of debentures. Okay, 20,000 is the value of the debentures. This has to be redeemed at a premium of 5%. So, 5% of 20,000 is 1,000. Total value will be what? Total value will be 21 21,000, right? 21,000 is the value or that has to be redeemed or that has to be given. Now, out of this, you can take 20% in shares and 80% in cash. 20% in shares means 4,200 in shares and balance 8 2s are 16,800 in cash. So this is the cash component. 4,200 divided by 20, you will get 210 shares, right? 221 and 10. 210 shares that is to be issued. So simple. Debenture holders, again you can do it this also. 200 debentures, 20% opted for that can be converted. So number of debentures is 40, redemption value 210. So that way also it is fine, and this way also it is fine. Okay, either ways you need to understand the logic and get it done. Right. So this concludes the aspects related to company accounts. Okay. So that is the first part of the RTP. We will also be covering up the remaining chapters and uploading them as subsequent parts. Thank you.